Eva, welcome to the show.
Thank you so much for having me, Justin. I'm so looking forward to this conversation with you.
Yeah, your career, you've gone a lot of different places, done things on the founder executive side, done things on the investor side. And where I want to start with though is launching Fika Ventures. How did that come about? What did you have in your mind as the vision for what Fika was going to be?
Thank you for that question. Yeah, it's been quite a curvy road to the investing side of the world. My first fund was actually Susa Ventures, which some of you might be familiar with up in San Francisco. Had a great time there and really decided to return home. LA is my home. I'm so grateful for Los Angeles for so many things. I mean, is the place where my sort of tech career began. And so I wanted to reinvest in this community. And what we saw, my partner TX and I, when we started talking, was while there were some great funds here, um, there was still a gap in the early stage for a fund that was run by an operator, a fund that was very focused on enterprise software. I mean, back then, 5 years ago, and certainly before that, I mean, LA was known more for media, entertainment, consumer. Those were
Yeah.
natural sectors, but I think enterprise software and SaaS and cloud and all these things, AI, ML, was not really synonymous with the city. And we wanted to do more here and really be a very sort of builders first type of fund. So TX and I decided to come together and start Fika in late 2016, and it's been a great ride so far.
Yeah, and you recently announced another big fundraise that you almost basically tripled your assets under management. Take me through like just mentally how you're thinking about now you've got much more capital under management. I know from your other interviews you've done where you came from, your background growing up. Just take me mentally how you feel about where the position you're in now. I'm really curious.
Justin, it's a place I never thought I would be or we would be. I think because of my background, and thank you for doing the research. I come from a background as a refugee, an immigrant, and very, very low income family, and non-English speaking, again, parents who have no understanding of finance, never bought a stock in their life, put cash, underneath their mattress type of people. No exaggeration there. So to go from that sort of development in psychology around money to today, where we're running and managing a large pool of money and making decisions that are high in risk is definitely a psychological shift that and mindset that I've had to get used to. And it's been a learning process. That's why I think I'm so keen on helping folks who have not grown up in the traditional with the traditional backgrounds to enter this industry because it's extremely hard. It's taken me 8 years. I'm still not sure I'm good at it, but I'm working hard at the craft. I started in 2013, and back then, writing my first angel check, and Gail and I have talked about this. It's like a shock, to write a $25,000, $50,000 check into something that's simply a napkin on a napkin type of idea. When my family, like when we were younger, we didn't earn our entire year $20,000, right? So to say, hey, you know what, like this guy pitches me for, or gal pitches me for 30 minutes and I'm going to write this check, seems just, it's such a strange way to think and see the world. And so I had to, over the last 8 years, get myself more comfortable in really studying this craft, learning from some of the best folks out there, and keep refining and honing it because it's not something that I was born sort of into the. I was not born in being comfortable with it, to be frank. And over time, I've really have learned a lot and in trying to improve every day. But yeah, but it's really an interesting ride, and I sense folks who are trying to jump into the industry from sort of really different backgrounds. It's quite the leap. So having good people around them, having infrastructure, having mentors, is so important. And I'm grateful to have had those people along the way to help me.
Yeah, I'm glad you bring all that up, and I wanted to ask that because it is this shift psychological shift of like you're going from this place if you haven't invested before, and you might have money now you'd never had before. How do you start? Because I think people are hearing about how this generational wealth is built in startups, and it's kind of the wild, wild west in terms of people not understanding where to get started, what this looks like, and that was why we launched Vitalize Angels to help more people get in this asset class that typically wouldn't be able to with $1,000 check, which is a much different thing than what you mentioned with 25, 50, $50,000 checks are much more unattainable for most people. But now with crowdfunding and other regulations we have, we're seeing it open up a bit more, which is amazing and will allow more people access. One thing you mentioned earlier, starting in 2013, angel investing. Take me through that side of things. Like, how did you first get started angel investing? Because you were an operator, crushed it for many years, but then the angel investing side, how did you get started there, Eva?
Yeah, I had a good friend, Seth Berman, who kind of pushed me, like shoved me into it. I was very sort of hesitant, and in terms of writing my first couple of checks, I was very lucky that the first couple of checks were good experiences. One of them was into a company that he brought me called Nest. So I think that also sets the tone for folks who are jumping in, because if your first couple of investments, say you do five and they turn out to not be positive, that also leaves sort of a certain impression and taste that you may not want to do more of. So I was quite fortunate that the first couple of investments were a positive experience with the founders, a positive experience in terms of outcomes. And that kind of got me started. And I was lucky also, and some people don't have this privilege, that my last companies were backed by really great VCs that I looked up to. I don't think I ever wanted to be an investor growing up, and I always saw the investing community as this sort of, ivory tower place that's very, the sort of Goldman Sachs type of feeling. And I was never drawn to that world, just because of how I grew up. But when I got to work with people from Andreessen Horowitz, which is one of the funds that backed us at Factual, seeing how Ben Horowitz worked and others on his team, I was like, oh, you could actually do this craft with a lot of heart, and a lot of sort of, and being very mission oriented. And I saw the impact of Andreessen as they were building their firm, as we were building Factual. So I saw some of
Yeah.
the best of the best, and I'm like, oh, it's not what I thought it is, and I could try to do that. If I didn't have that exposure, I would probably have been stuck thinking, VCs were a certain way, a type of people, and a
Yeah.
type of job that I did not want. So I was very lucky that I was exposed to some of the best, and it got me thinking, oh, when I started doing these angel things, I was like, well, maybe I want to do a bit more. And my friends Seth and Chad and Leo, we came together as just a band of friends who moved from doing angel investing to something that's a little more structured with Susa One. And we were all basically learning on the job. I think none of us had been doing investing in any institutional way, but we encourage each other to try and, again, to surround ourselves with really smart people. And that first fund was a really wonderful experience and allowed me to set the foundation to do something bigger later on with Fika and with TX.
Yeah. One thing I want to pull out of what you just mentioned is representation matters a lot in terms of people being able to see it's possible. And what we're seeing now with, more people getting into the venture side and trying to diversify venture a bit more. Even like people come to mind, like Charles Hudson at Precursor, like Marlon Nichols comes to mind, like these people who have done a really great job and like they're showcasing what's possible. And then on the other side, more women getting into venture. I mean, I joined Vitalize. A big part of it was because it was a women-led firm, because I didn't want to join a male-led firm, honestly, because I wanted to kind of go on the other side of things. And so that was a huge reason why I joined. So I love that you mentioned that, and like representation in VC, people can see it's possible. Little kids grow up and see it's possible. They want to go in that career path, whereas they may not have 10, 15, 20 years ago, which I love to see that side of things too. The other part I want to pull out is you mentioned like learning and growing from different mentors and all of that side of things of learning, educating yourself as an investor. What's helped you? How have you progressed and gotten better as an investor? I'm just thinking of all the potential investors listening who are like, where do I begin? How do I even get started? How do I become better? What helped you improve, you think, as an investor?
I think a lot of it was when I was starting was recognizing that coming in as an operator brings a lot of strengths, but it also brings some baggage. And doing my best, and not obviously, and often not perfectly, recognizing the baggage from being an operator, where you want to get into the nitty gritty of lots of things with your companies. You want to be around the table. You want to provide very specific advice. There are a lot of things I had to sort of shift from the operator mindset, and knowing how to bring the good things about that role that I did for so many years in building companies, to now switching to the role of an investor. So that journey, I really just read a lot, talked to a lot of folks who made a similar journey, and really trying to understand that, that sort of career shift. And then once I was in it, I just kept a very open mind and recognizing that I never wanted to be successful in this job because of luck. I think
Mhm.
because there's the last 10 years has been such a boom in the industry, Justin, that it actually doesn't take a lot to be somewhat good at it, right? Because there's a lot of capital coming in, there's a lot of innovation. If you're even part of the Silicon Valley, network community, you already have a pretty good advantage. So I could pat myself and say I've done great, but the reality is, I was sort of following a lot of the tailwinds that was already here, but in that tailwind, I was really trying to make sure I was understanding the craft that was before me, understanding how to build a smaller team, and how do we actually succeed for the long term versus building a fund that rested on one or two big wins. It's pretty easy to get one or two decent wins today, given, again, it's been a very, very strong 10 years, 10, 12 years. But it's hard to do it for, many decades, and it's hard to build a franchise. And my ambition when I started Fika in 2016 was to build a multi-firm franchise. It wasn't going to be like, well, I'll do this for 10 years, I'm tired of operating, so why not? I'll sit here, I'll collect some fees, deploy some money, and have a great time. I want Fika to live beyond me and TX. So with that in mind, I knew there was a lot for us to learn. There's a lot for us to prove. And we did it. TX and I did it together, but supported by a lot of the giants in the industry that I had so many conversations with. Like, how did you think about portfolio construction? Like, how do you think about reserves? Like, I didn't know. It was all new to me. But I knew, sort of, I recognized what I didn't know, which was a lot. But over time, I got more comfortable. Like, I recognized the things I was really good at, which is, working with founders in the early days and helping them think about company building and all that, and the psychology of founders and motivation. Like, those things I was very comfortable with. But it's really all the mechanics of building a fund that a lot of people don't appreciate. That takes more time, and it's not an obvious thing. And I think TX and I was kind of came into it with a lot of humility. We had great LPs that believed in us and also were great thought partners for us. So through that journey, through a lot of like self education, working with our community network, working with really smart people, I hopefully have gotten better over time.
With that too, you mentioned some of the mechanics behind it of the fund itself. So take me through what do you look at in terms of your portfolio construction at Fika Ventures, and also you mentioned reserves as well. Let's go through that, like how you look at follow-on versus kind of your first investment. Take me through some of those details too.
Yeah, it's been a really wonderful evolution in learning and making mistakes. So we started with fund one that was 41 million. Then 2019 we did a second fund that was 77, and then the current fund is 160. And I think the progression of that was very sort of well thought out for us because we wanted to like walk before we ran. We wanted to crawl, walk, and then eventually start, skipping. I'm not sure we're running yet. I'm not sure we're running it yet, but
Trending
um,
towards running. Yeah. Okay.
yeah. But I think in that first fund, like we wanted to have a very clear strategy of what we're going after, how many, sort of check size, ownership targets, taking on board seats, being valuable, and really trying to prove ourselves as good partners on the cap table. Like we didn't know whether we could be the best partner, but we're like, let's try to be good partners, reliable partners. So I think in fund one, we're able to prove out with our portfolio that we were, decent pickers, a nice cohort of companies. Founders thought what the service that we created was valuable. And then we kind of, as we went on, started to earn our way into larger checks, more ownerships, a bit more board seats. And from there, earning our way into, getting to keep our pro rata and being able to participate in follow-on rounds. And finally, we were able to close a small opportunity fund in this latest, as part of this latest fundraise. So we didn't rush into it. Like we kind of knew that we had to prove to ourselves, in our LPs, that we are, doing things in a thoughtful manner, before we sort of dove in. And anyways, that's sort of how we got to where we are today, is by proving the consistency of our strategy and our team being able to take on more, and earning the respect of founders that they are allowing ourselves to have a larger position on the cap table. So that's been the evolution so far.
How do you stick to your guns on that side of things when you like see these valuations rise, you see the changes in the market, you have your plan, and then you see what's happening, and things may come in that don't fit your thesis or are outside of it, but a little bit, and then the valuation is a little higher than you want to. Like, how do you stick to what you're doing or be flexible when the market obviously is changing? How do you go about that, Eva?
Yeah, I think it's something everyone is honestly struggling with. Gail and I actually talked about this when I was speaking with her recently.
Yeah.
It is quite an art to know when to stay disciplined and when to make those exceptions and when to make those exceptions, not an exception over time. I don't have a perfect answer, but I think you could approach this in two ways. You could be very frustrated today and say, "Oh my God, the market is crazy. Everything is frothy. Everything is expensive, and woe is me." Right? The more positive way to look at it is all these changes most of them are based on very positive tailwinds, right? Which is there's more innovation than ever. Technology has infiltrated every industry globally. The borders for becoming an investor have sort of disintegrated. There are many more wonderful investors like you, Gail, and others entering the system, and that is so exciting. So we have much more diverse capital, accessing more diverse people and communities all around the world. So that's what's causing the frothiness, right? And for me, all that is positive, right? And if I take a long term view and not think about the short term sort of, oh my God, I'm losing more deals,
Yeah. Yeah.
and I have to pay up more, oh my gosh. But if I see the sort of take the long view of where this industry might head, all these things are positive. And I'm okay to play into that. And I think the occasions we're pretty disciplined fund, but even now we're kind of pushing ourselves more because I think the best investors will say all the great, sort of category defining companies out there seem very expensive when at the time that you participated, right? The timing is never, it never feels right. Like it always feels like, oh, you should have gotten in a little earlier when it was a little less expensive. Everybody
Yeah.
wants that, right? So, but at the end of the day, it's more about being able to get in, period, and not really nickeling and diming like, did I pay 10% more, 20% more? So a lot of times we are pretty disciplined, but for exceptional founders, exceptional ideas, great sort of ambitious things, we will make exceptions today, and we're stretching ourselves, and we appreciate the market forcing us to stretch, right? Because I think
Yeah.
I would say 10, 15 years ago, being an investor could have been a pretty lazy job, right? You sit, on Sand Hill Road, you look a certain way, you have a
Yeah.
pile of money, and people come to you, right? And there you are, you're sort of the king of the kingdom. But today, because there's increased competition, you can't be lazy, right? You really have to go out there and really think about your strategy, think about what your competitive advantage is, and how and why you deserve to win. Because it's
Yeah.
not like, oh, I'm waiving my $1 million check, so thus, Mr. Founder, like you obviously take Eva's money. That shouldn't be the case, and the power of it rests with founders today. And I honestly think there's more positive to that than negative. So
Yeah, no, I appreciate your insights on that. And one thing I'm curious about, so at Vitalize, we invest in future of work, both out of the Vitalize Angel community and the fund we have. And you have a few companies in there as well. So like Applied Global being one of those. What are your thoughts around future of work, maybe trends you're seeing or things you're interested in within that space? I'm curious because I can't just not ask you. I'm curious on anything you have on that, Eva.
yeah. As a correction, we're not in Papaya Global.
Oh, sorry.
We're in Papaya Payments.
Sorry. Yeah.
That TechCrunch article was a typo. But in terms of future work, I feel sort of the boundaries have shifted so much, right?
Yeah.
In the past, sort of your employer dictated where you work, how you worked, and sort of that was sort of the construct that you had to play in. Today, like that has changed in, I hope, in very positive ways, where there's a lot more flexibility in how you choose to pursue your career, pursue your passion. Um, and I think that for me is very positive, and hopefully all the tools to support that flexibility and the access to really unique global talent is, I think, going to be very, very positive. So I'm hoping, COVID, one of the silver linings is that the future of work is going to be, there's going to be a lot more innovation in it. But at the same time, I think as we go towards that future, it's going to feel bumpy, and scary, because a lot of companies are kind of navigating in the dark and trying many different strategies, whether it's hybrid or not. And people are adjusting, and it's going to feel incredibly uncomfortable. But I think there's going to be some great things that come out of it. I'll give one example that a company that Gail, Vitalize and Fika are in that we're so excited about that plays into this is a company called WeCare that focuses on childcare. So, as everyone knows, childcare is a catastrophic, it's such a disaster today in America. And people have been trying to solve it for many years. So WeCare is not innovative in that way. But the shift right now is that employers are realizing that they have to participate in solving this problem. Um, in order for us to have sort of some progress here, right? We cannot just rely on the public sector. We just cannot rely on government subsidies and other things, right? The employers have to participate in order for them to attract and retain the best talent. So, what's exciting to see is WeCare moving into this corporate benefit space, the receptivity of employers. They actually go after a lot of, as mid-market employers that are in the middle of the United States that are not your typical like fancy tech companies. And these companies that have thousands of employees are saying like, I'm losing the best people. I'm losing women. I'm losing people of color because I cannot provide this very essential benefit. And, that's the hope is, the silver lining of COVID is that childcare will no longer be a fringe benefit, right? It will be a mainstream benefit. So I think Gail and I are very excited about this company, but that's just one thing that's also shifting from a benefit size as it relates to future of work.
Yeah, and also just thinking about the war for talent and how do you stand out and offer more to your employees. I mean, there's so much around that I see it every day from talking to founders and VCs. Like, yeah, everyone's trying to hire. Of course, like we're trying to hire. I mean, how do you go about getting people to come on your team? Like there's a lot of things you can do. One, it's the culture, of course, and inherently what you're doing and working on, but also what do you give to the employees? How do you take care of them in some capacity? And so it's such an important thing to have that, especially, if we look at like the Mom Project, one of our investments, and doing a ton for working moms and people who want to get back into the workforce and say, okay, how do we support more people, in that capacity? And I think, yeah, WeCare is great. I had talked to Jessica not long ago. She should be on the show soon if it hasn't already released. And then also one thing I have to talk about, I'm really curious about Screen Door. I talked to Hunter Walk about Screen Door, his involvement, getting started with that. I'm curious for you, how'd you get started with that? Why be involved? I'm curious about that.
Yeah. So the credit fully goes to Hunter and Satya in coming up with the idea and really, putting the full foundation to that. So I was a participant after the fact, but I'm so proud of Screen Door. I'm so proud to be involved. I've known Hunter and Satya since our early Google days together. We were actually cube mates, many, many years
Throwback,
ago.
love it.
Yeah. So we stayed friends and sort of watched each other navigating from the operating world. I think all three of us took, somewhat similar journeys, and we always like look at each other like, I can't believe we're investors today. It's such a weird thing. um, and I think the three of us, and all the people involved, I think we've always been had this sort of shared mission that there's so much more to do. Yes, you could pick companies, invest, you could there's all that, right? And running a fund and being a top performing fund, that's great. But what else? What else can you do? So I feel so lucky, and I'm sure the team at Vitalize feel like to be able to do this and sit in the seat, right? Like, why do I get to sit in the seat? And if I get to sit in the seat, manage capital, and have this influence, I get to choose who I fund, and all the great things that come in. Like, what else can I do with this? The power of this role, and Screen Door is such a great output in that the folks involved, all the GPs and all the LPs felt like, man, if we brought together a great group of folks, we could really work on trying to accelerate the access for a lot of emerging managers from all over the country and hopefully soon all over the world, and allow them to sort of get into the industry a lot faster, and not only get into it, but also be super successful in it, right? By having the right infrastructure, having the right mentorship around them. And that's really, it's been so much fun because we've met so many great managers that I've never heard of before. And I'm like, I
Yeah.
talked to somebody from, Indianapolis or Atlanta, and I'm like, I could see this working. I could see you working. I can see you being a car. And that's wonderful. That's wonderful.
Yep.
And I really think, I hope Screen Door will continue to thrive. There's clearly product market fit with that vehicle. And I really hope there will be other Screen Doors out there, because I think if they see the success of Screen Door and the talent that we've been able to bring together in the community that we've been able to build, that other people like, big LPs that are like, oh, I don't know how to deal with emerging funds and I can't write the checks are too small. Maybe they'll see it and say there are creative ways that you can dive in and get involved and back emerging managers, back funds that are smaller than 100 million. Hopefully this will be an inspiration for many more screeners to come in the future.
Yeah, and I love that you mentioned that because we're thinking of the same way in terms of Vitalize. It's like whatever you do, especially when you're leading the way on some of these initiatives, it's like if people can copy the model, then the impact is so much greater than you could ever do on your own. And like you guys are leading the way with Screen Door, which is amazing. And you're hopefully seeing more of these being done, more funds being raised for this, so other emerging managers to support it and diversifying the whole ecosystem. I'm really excited about everything with that. When I first heard from Hunter and I saw you're involved too, I was like, okay, I'm going to ask Eva too. I'm curious about her involvement. But I know we're out of time here. Where's the best place for people to learn more about Fika Ventures and connect with you as well, Eva?
Yeah, we're very accessible. I'm just Eva at Fika .vc. So feel free to reach out. I always love meeting new founders, new investors. So yeah, we really, really love the community in LA. And I think whoever wants to participate in this community and be additive, I'm always happy to have a coffee and talk to them. And Justin, thank you for everything you do, for you and Gail. Thank you for Vitalize Angels. I think you're on to something really big. And I'm very excited to see what you guys are going to do next. And I'm very excited to hopefully work with you. We Care is the first one, but I'm hoping there'll be many more to come because I'm a big believer in what you guys are building.
Well, I appreciate that a lot. Thank you so much for the time today, Eva. Have a great rest of your day.
Yeah, you too, Justin. Thank you.